Thank you, Esther. The market has been stable, basically. Lots of activities, really. Market is ranged from 360, 364 levels. We've seen lots of exporters, actually trying to sell forwards, trying to lock in rates. This, we believe, is based on their expectations that there won't be too much further depreciation of the Naira. They expect the 364 levels to actually remain. And that's basically what we've seen so far.
So there is no concern of whether or not there will be predictability in terms of the direction of the Naira, especially at the RNE window. Yes, I know that the oil prices are still above $70 per barrel, and we've seen a bit of stabilization with oil production and output so far. But do you think that traders are still a little bit worried as to perhaps in the short to medium term what the direction of the Naira could be?
Definitely, clearly the direction is further depreciation. Let's take it from the intervention. You see levels around the intervention levels have actually converged. We've seen rates having moved from 340, 350. Now we're actually having rates at 359 levels at the CBN intervention. While for customers that are bidding at 330 levels, they get funds at for 120 to 150 day forwards. But for those that are going at 359, they get funds at spot levels. So we can say we've seen a good level of convergence, although there's still room for further depreciation. Most of the FPI outflows, the CBN has been able to cope. They've increased their performance in the market. But like I said earlier, the good thing is we've seen a lot of exporters also coming into the market, trying to sell even at forward prices. And none of this has broken the 365 mark yet. So we expect, even though there'll be a bit of pressure, like you said, oil price is still good at 75, 77 levels. Some of our production cuts have been resolved. So we should be able to sustain 1.8 to 2 million barrels per month, basically, so per day, and that should be able to help sustain the reserves. Fine, the reserves have dropped to about 45.5 billion, but with the upcoming Eurobond that could happen in October, about 2.8 billion could come back if that is successful. And that should keep the CBN, should keep the reserves a bit stable,
okay. Okay, let's move on to the fixed income market. Now we've seen positive trading on the T-bills side of the curve, but that took a turn yesterday. Talk to us about trading at the T-bills market today and the level of liquidity at the market.
As I speak, market closed up at over 500. We started the week at those levels too. There was FAC payments on Monday. Central Bank tried to mop up. They were consistent with about 3 auctions. However, they were only able to mop up about a third, about 500 billion from the 1.5 or so trillion they had on offer. Eventually as well, we saw them move their rates by 35 basis points and 45 basis points across the buckets, inching up slightly. We now see them selling at 11.5 to 12.5. So this also took its toll on the market. We saw lots of bullish activity, lots of interested buyers coming back in. Initially, their preference had been for money market products, but with the CBN move, we're seeing a lot more interest coming back into the fixed income space.
For next week, last point here for next week, what can you say in terms of how the yield curve will trend?
We expect the correction of the yield curve to continue. Lots of interest as yields begin to pick up for the longer tenors. We expect there will be lots of interest, and the yield curve should continue in its normal positive direction.
Okay. All right.
Yeah, basically that's our take for next week.
All right, Olawale.